Let's start like this. If you were in a plane, and the pilot told you that the plane is not going to make it, that it's going to crash, and you're doomed, what would you do? Would you believe his knowledge and experience, or will you ignore it? Yes, that is exactly what's about to happen right now to the U.S. economy. It's like watching a plane crash. A mega crash. If you've seen the movie The Big Short on Netflix, you will know about Michael Burry. That guy that predicted the crash of the stock market back in 2007, and everyone didn't believe him. Even Warren Buffett regretted not believing him and called him Cassandra. Why? Keep that in mind. I'll tell you why in a moment. Well, we all know that the doom he predicted happened exactly as he said, and he and a few other people who believed him made a lot of money from that. Now, again, he's predicting the second doom this year. This is why he tweeted, "It's like watching a plane crash." He has been saying this for some time now. He's predicted that within the next few months, the worst financial crisis in the history of the U.S. is coming. Right, so this means we're talking about a collapse that's worse than the Great Inflation, the Great Depression, the dot-com bubble, and the 2008 recession. Michael Burry warns that stock market speculation has reached levels not seen since before the 1929 crash, and assets are more overvalued than before the dot-com bubble burst. So like I said earlier, even Warren Buffett, the greatest investor of all time in America, who didn't listen to Burry before the 2008 recession, later regretted this and publicly stated that he should have considered Burry's hypothesis. Here's why. Few years before the 2007 and 2008 crash, Michael Burry bought his first credit default swaps because he believed that the housing crisis was going to happen. He went ahead to buy $60 million of credit default swaps from Deutsche Bank, $10 million each on 6 different bonds. His prediction the U.S. mortgage-backed security, once a stable, respectable investment product, had slowly turned into a dangerous and deceptive time bomb, all caused by greed and corruption in his eyes. This bet was no gamble. He did the digging, he read the documents. He knew what the outcome would be. His problem was that it would take the rest of the world another 2 years to even start looking at it. To cut a long story short, he made billions in the 2008 recession when others lost billions. Moving on, what makes this even more scary is that back when we were just dealing with a housing market bubble, today we're dealing with the everything bubble, like crypto, housing, everything. Okay, so that was 2008, but how will Burry profit on the next market crash? Very simple, I'll tell you now, listen carefully. For over 13 years, the S&P 500 has had a smooth run. Since 2008, it has increased in value by over 6 times its value. Why? Growing liabilities. You see, U.S. total public debt has tripled to over $30 trillion since 2009. To be honest, it may be impossible to know how much debt is too much. However, it's certainly not sustainable to keep adding trillions of dollars in debt every year, because if you have a massive decline in consumer savings, coupled with the growing debt balance, that economy is heading towards catastrophe. See, right now, the U.S. personal savings rate is currently reaching levels that haven't been seen since 2008, and total personal savings have also declined through levels not seen in almost a decade. But how does this predict a doom? Hold on, I will discuss this in a second. Just stick with me to the end of the video. Let me show you what Burry said. Burry believes that if the S&P 500 lose, which it could lose another 50 from where it sits. On May the 3rd, Burry tweeted, regarding paradigm shifts and speculative peaks, the S&P 500 bottomed 13% lower than 2002's bottom in 2009. 17% lower than 1998's LTCM crisis low in 2002, and 10% lower than the 1970s low in 1975. 15% lower than the COVID low is an SPX 500 value of 1862. Roughly Shiller PE of 16, nominal PE of 9 in historic range. To explain this in simple terms, what this simply means is that the trend we've seen over the past 25 years is the bottom of a current market crash is usually lower than the one that came before it by about 10 to 15, adding that 15 below the S&P 500 low that we saw in 2020, which takes us down to 1862 points. This then shows that Michael Burry is anticipating a peak to fall of 61.4, which would bring us back down to the historical normal Shiller P of roughly 16. It is at this point the crash happens. Back in February 2021, Michael Burry first warned of high inflation as a consequence of the Fed's unprecedented money printing. As you might have known, almost $1 in $5 was created in 2020 alone. He was also tweeting and asking us to prepare for inflation, hashtagging doomed to repeat, and calling out the U.S. government and the Federal Reserve over the trillions of dollars worth of stimulus they've done. What did the government do? The government ignored him because despite all the money they were printing, inflation was still reasonably low, because annual inflation rate of just 1.7 was still lower than the Fed's target. Moving to 2022, just as Burry warned again in a tweet that we're now running at a red-hot inflation rate of 8.6. Burry tweeted, "Habitually be 1 or 2 years early on literally everything, and you too can attain broken clock status," just over a month ago, where he referenced a tweet made by Elon Musk where Musk labeled Burry as a broken clock. Despite this, Michael Burry wouldn't stop. He has been tweeting even more extensively and telling you and I why he believes this economic crisis and subsequent market downturn has only just begun. Today, the price of everything is rising. We're seeing inflation everywhere, but despite what we are currently seeing right now, he believes the worst is yet to come. Oh, by the way, I said earlier in the video that I'll tell you why Warren Buffett called Burry Cassandra, and why Burry has the name Cassandra on his Twitter account. This might sound funny, but it's true. Cassandra is a Trojan priestess in Greek mythology that told true prophecies that nobody ever believed. Buffett called Michael Burry Cassandra because he was telling a true prophecy that everyone ignores, and he's telling us again now. Going back to inflation, the fact that total savings are declining, the threat of stagflation, surging fuel prices and shortages loom, while trillions of dollars are being added to the economy is extremely concerning. What about credit card debt that is reaching all-time highs, signaling that the consumer is getting weaker and weaker every day? In another tweet, Michael Burry stated that U.S. personal savings fell to 2013 levels, looming a consumer-led recession because lower consumption in the products market will lead to less corporate profits, and less corporate profits will lead the factor market to weaken, decreasing household income and weakening the products market. All these are very delicate cycle. Any negative event could instigate an infinite downward spiral, what is also known as the circular flow model, and any little economic disaster at any point in the cycle is catastrophic. Michael Burry tweeted, "A downward trend of the U.S. personal savings to GDP, charting total U.S. personal savings GDP redline, has the all-time low at 1.5%, set in July 2005. At the last 12 months rate of depletion of savings could hit that level between September and December this year, borrowing time." He also attached a graph showing a cyclical decline in the personal savings to GDP ratio. Hence, this is another consumer-led recession. However, it's not just Burry, though. Federal Reserve Chairman Jerome Powell once said in 2019 that he was very worried about the growing U.S. debt. The total U.S. debt, funny enough, back then was roughly $22 trillion. That was just last year. That number has now increased to over $30 trillion, an astonishing 36%. So, in Burry's eyes, out of fear, we're likely going to see a lot more selling volume in the stock market coming over the next few years, which would lead to much larger declines in the stock market, and it's a scenario that he said he's not looking forward to facing. On the 24th of May, he tweeted, as I said, about 2008. "It's like watching a plane crash. It hurts, it's not fun, and I'm not smiling," and that's the interesting thing to remember with Michael Burry. Here is all before the first time through the dot-com bubble, the second time in 2008. He's seen these repetitive patterns of human behavior time and time again. What we are seeing now in 2022 is that we have both stagflation and an incredibly weak labor market. He tweeted an article that stated the parallels between the 2020s and the 1970s grow more numerous by the day. You might say, even though the economy is in a poor position, wouldn't a strong government body help alleviate some economic and social concerns? But this is not the case because economists believe Joe Biden is not helping the situation. Even the news media are complaining about how Biden has been exacerbating government debt issues. This is not to scare us, it is just to let us all prepare now. What can you do to prepare? Well, those questions will be answered in subsequent videos on the channel. If you like this video, please hit the like button and share this video with someone that needs to know about this as well. See you in the next one.